So today I wanted to talk about some, not some, the biggest trading lessons that I have learned throughout my trading career, and like how do you maximize your trading profits? How do you avoid big mistakes when trading? And how do you get consistent results, like week after week, month after month, year after year? Um, I'll start with explaining the basics. So the basics are that when you trade the markets, you need to understand that literally you're competing, same as everywhere else in life. You're competing against others. But the difference is when you are trading, you're competing on a global level. Like imagine having a global business with global exposure. It's the same thing. So if you are competing locally, let's say it's a local trading competition and you need to win like a certain position in the charts, top 10 position. And again, if that event is local, you're only competing against the local traders. And it's not going to be that hard as when you're placing live trades um, in the global markets. Because when you're placing live trades in the global markets, again, simply put, you're competing against the best of the best in the trading industry. So, in order for you to win, again, to simplify things, simply put, you need to be the best. And what does it require for you to become the best? Well, you need a lot of practice, as with everything else, and you need to like trade with big amounts of trading when you actually are at your peak. You cannot go trade and expect to make profit and a decent profit with a small position and when not at your peak. Because you could be the best trader in the world, but if you haven't slept for 3 days, haven't had a meal, and you just got divorced, it's gonna mean shit. So you've got your actual skills and you've got the level of skills and concentration that you can bring at that specific point in time. So in order to be using your peak potential, at the moments where you're supposed to be making a profit and close the day in profits, you have to understand that this particular trade, this particular trading day needs to be a day where you have had more than enough sleep, you have had the best meal that you can afford, and when you start trading and making profits, you'll be just like reusing the same capital. Because if you follow the rules strictly, which is the hardest part of all parts, if you follow the rules of successful trading strictly and keep recycling the money that you've got to trade with, what you're going to be doing essentially is trade, close a profit, usually a decent one, reuse that profit to get some rest, take a day off, get some other nice meals throughout that day. Um, Again, make sure you don't have any external bad events happening in the same time frame that are going to be excessively drawing your potential and capacity to take quick rational decisions, especially when we're talking about trading with big amounts. And only trade when the market conditions are correct, when you have evaluated the overall market direction within the last at least a month, and when that direction is in your favor, when you're going to be placing a trade, when you have a good entry um, of a trade in that same direction. If that's the case, you're rested, you've had some perfect meals according to your budget. Don't go overspending, obviously. Don't go into a 5 grand meal restaurant if you like can only afford 50 50 pound or dollars or whatever the currency is. If you can afford 50, go for 50. If you can afford 30, go for 30. If you can afford 10k, go for 10k. As long as you can afford it, don't spare money on your food, on your energy source, because the food is your main energy source. Don't spare money on your mattress, on your um where your flat is positioned at, or house, home, uh, or whatever that's gonna help you achieve ultimate energy levels and ultimate um, rest. Simply put, the rest and your food. If you can exercise, that's gonna be like a huge bonus because it contributes again to the same thing, um, a good flow of energy. The more you exercise and get a good rest after you exercise, the more your body is going to be in a good balance to be able to focus, to be able to withstand stress and so on and so forth, to recover from stress. So again, if you have all the conditions right, and if you have determined the overall market direction long term, and for that specific trading day moment of time, you can see some good entry. Um, Basically, what a good entry means is, let's say the market direction is up overall, but for the day we are down big time, 5, 10, ideally above 10%. So when that happens, usually because it's against the trend, it's a pullback. And when you got that kind of a pullback, very usually, even just temporarily, we've got a huge and sudden spike into the direction where the market initially was moving, even if we do a few more deeper corrections before we carry on upwards, if we carry on upwards. But that's your ideal trade trading setup in terms of your circumstances, your energy levels, the food you ate, the market conditions, evaluating market conditions. and pulling the trigger when the actual entry is there. And the best way to use the entries, instead of being stuck at the charts, which is a good thing, but sometimes can lead to overwhelming um, effect and to like you getting tired and so on and so forth and exhausting your resources before you even enter the trade. So ideally, place some alerts, and when them alerts start popping off, make sure you're ready to go. Um, do them a bit earlier from your ideal entry point and do several of them. So basically, you're gonna get notified for the first one, boom. Very usually, you can do like boom, boom, boom within a few minutes, and then you know that we are drastically moving into some direction, providing you with a crazy ass entry. And what you should do at that point, obviously not financial advice, is if the deal conditions that you preset are met, um, either do a market order in order to get the perfect entry executed, do it in advance and keep following up with the action by hearing the alarms that are be that are going to be set it off, or once when you see the actual movement and price levels, then you can start thinking about if you should get in a trade or not, and then you can place a position. And ideally, what you need to do is place a few orders to get the deal entry by leveraging average prices. So what you can do is have some fairly good sized entry, but not what you want. If that pops off and you get into an instant profit and a decent one, don't do anything more. Just wait for your target and have a few exit points with different sizes. Let's say 30, 30, 30 or something. 3, 3, 33, and then 3, 3, 33, and then 33, 33, and then you're at 100, so you're out. Meaning size out of your position. So if the trade carries on into that the desired direction, yeah, the last entry is going to be at a very very good profit, even if just 30% of it. Um, and at the same time, if you execute just the first one, you still got some profit, and then even if the rest of the size gets exited at some like lower, um, like even on a break even, like 60% or 66.66, if you if you get to execute that size um, on a break even, and the 33.33 was at your first exit, you're still in profit. You have to remember that. But if you don't execute anything and you get to realize some profit, like virtually, but not actually and factually, because you didn't hit the sell, the exit, depending on if it was a short or a long. But if you didn't execute anything, you have nothing, regardless of the waiting, regardless of the expenses that you've made to make that day the perfect day to be trading. So you have to have multiple entries and multiple exits, and that's the deal. The more you have, the better. And that's how the big professional players are playing it. And averages are always winning in life. The only way to win in life is balance and averages. Um, So with that being said, maybe what else you should consider is like the news trend. Was it positive lately? Was it negative? And was it actually affecting the price positive if it was positive? And was it actually affecting the price action negatively if it was negative? If that's the case and the narrative continues to be negative, then carry on being confident about the short. If it was negative but instead the price action was positive, um, then reconsider. Um, Basically, if it carries on being negative, expect more positive um, price action, and if it suddenly flips to positive, you actually might get the like pseudo positive news event, and you might get a change of conditional market conditions. So that's why you need to be very very careful when you listen to the news, because I've even paid in the past like subscriptions of the supposedly reputable financial sources of information, and I was actually following them strictly to see what's going to happen, and I was actually doing it with live accounts, which was a bit stupid because I was just testing it out. Um, but what the result was, and why I remembered it because it was on a live account, so maybe that's why I'm saying partially it was a stupid idea. To a big extent, trading on live accounts, ideas, it's a good thing because you remember them. You remember the profits, you remember the losses, and you remember the lessons. What's the most important thing? Even if it's with small trades, when you test new things, it's not a bad idea if you're an advanced trader to do them on your live account. So what happened was when I was using the reputable sources of information, like I even forgot like what were they called, but pretty much every like Forbes had the financial publications. What was it? You've got all kinds of um, premium versions of financial news to get them supposedly quicker and so on and so forth. So what happened was that again when I was following them signals or whatever you want to call them, actually I lost money every single time. So basically uh, the main takeaway from it is that when you've got um, major announcements and you're trying to trade them, usually the exact opposite of what you expect based on the news happens in the real market, in the real world. So basically, if you've got a positive news about, let's say, Bitcoin, usually it sells out like we saw with the Bitcoin ETF, and a lot of people were expecting it. And even Cathy Wood said that we might actually not see a sell-off because everyone is expecting a sell-off, but we still saw a sell-off. So basically, the elite, uh, the people who are kind of controlling the market with the big money pockets, I think what they do is they don't waste a single event where you can sell the positive news, because most people um, are beginners, and most people don't even learn, even if they're not beginners, meaning have a bit more of an experience, but they still like fall into the like they're not beginners but they're not pro as well. They don't learn the mistakes from like the experience. They don't learn the lessons. So the market manipulators, the big dogs, they know that most of the people are gonna fall in that trap. They're gonna get the FOMO when we've got some small, insignificant run on a positive news, and they're gonna keep buying the top, creating liquidity for the money that entered the market when everything was negative, because the big money are always doing the same exact strategy that keeps working like charm if you manage to like challenge your emotions. So when we are always in a negative state for months and we hit bottoms and further bottoms, what the leads are doing, they are having average entries. So no one knows exactly where the bottom is going to be, is my best guess. If someone knows, that's even better for them. They can even better manage their emotions because they're literally controlling the price, by placing the orders, the big orders. But in my opinion, no one knows the exact bottom, um, unless there are very few people that do. So the rest of the market, even the ones that are successful, even not knowing exactly when and what and why, what they do, they are very patient, and they do the opposite of what the expectations are. So when the expectations are that the price is going to keep dipping, they know very well that even if the price keeps dipping, because you don't know when the exact bottom is going to be, your best strategy is just to average in the market, buying in the market. The lower price they see, the bigger the orders become when they place them, the buy orders. And when the price gets higher and higher, what they do is they start getting rid of their bugs gradually. And like the biggest sell off of their bugs is at the highest possible level, meaning if the price keeps going up and up and up, they keep selling more and more and more. And that's why you've got the biggest sell offs from like drastic, quick sell offs from like higher levels of prices, whatever asset you choose to inspect in the like go in the past and just see the charts and see what happens. um but that's how the game is being played. And if you check the news, if you start checking the news every time when you get the sell off, the news for the most part are positive when we're seeing the sell offs, instead of negative, because that's how again you create sellers, motivated sellers at the top, sorry, motivated buyers at the top, so that the big sellers can sell to you, because they, if in order to sell something, you need always buyers, because when they sell, they want to sell the most of it at the highest price possible. They need a lot of liquidity, and that's where the retail and the dump, uh big money, like someone who for some reason, they sold their apartment or whatever, and they decide to come in trading. That's how they get the apartment money, through markets, by using leverage, using experience, using anti-emotional trading, uh, against your emotional trading to take your money. Because the markets, they are literally an exchange of between between the smart and the stupid money. The biggest rip-off of the whole general population happens during trading hours, because unexperienced traders, emotional traders, and so on and so forth, you name them, the ones that are losers, they're willing to spend their apartment money, their life savings, trading, expecting to double them and have a second apartment, or whatever the goal they have in mind is, to have a Rolex, or have more bitches, whatever the goal fucking is. That's what's happening. And it's sad that most of us never learn, or we take ages to learn, and it took me quite a lot of time to get over my emotions as well. It is the sad reality, but that's how life works. And these are the basic rules to become successful. And it's very easy to be said, but it's extremely hard to remember it properly, to implement it properly, and to keep maintaining the implementation over time. Because you can do it a few times, but you get optimistic, you get arrogant, and you fuck up because you stop following the rules because you thought that you're just very good. And the fact of the reality is, you're not. You're only good when you're not concentrating on you being good, but you're concentrating on the rules, because the rules are never failing you, or on average they might fail you a few times and surprise you. But obviously, if you've got your stop losses and so on and so forth, if you've got your protections, if you're constantly pulling out money of your trading account and never leave more than enough to trade with, the market can surprise you a few times here and there with some big ass liquidations, but it can liquidate like what, your 10% of your trading money, and it's going to be very hard to get you 10 times, subsequently, in order to liquidate your trading capital, so that you have to work your ass off for another 10 years to, or whatever time it's going to take you depending on your income, to build up enough trading capital to be worth trading. But again, these are the pretty much the basics. I don't want to go too long on it because it gets boring and you start repeating the same things. But I wanted to get that out, um, with like an updated mindset, some more lessons potentially from what I've shared before, and to try to grow my YouTube account because I haven't worked on it for a very long time because I'm quite busy with loads of shit, and see how it goes. If I see that a lot of people are supporting me and asking for some more ideas, and lessons, I might pop up again and share some other stuff. But yeah, that's pretty much what I've got for now, and we'll speak soon.